All right, gather around, kids. Let's do some business. We are doing it live and doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. You're listening to Mottek On Money, live on the air on 790 KBC, streaming live online worldwide, kbc.com, and the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks wrapping up this week with another pullback today on the latest jobs report. The big enchilada monthly economic reports came out first thing this morning, which ended up dashing hopes of a big interest rate cut by the Federal Reserve later this month. All the major averages did pull back after that jobs report came out, rattling the markets with the S&P 500 just racking up its biggest weekly drop in about a year and a half. The Dow coming in for a closing loss of 410 points today, settling back to 40,345. The S&P 500 down just about 95 points at 5408. And the NASDAQ plunged 437 points to end at 16,690. It was a rough landing to a volatile holiday-shortened week on Wall Street. Wide swings just about every single day this week as the month of September got off to a rough start following a volatile and record-shattering month of August. We started the Labor Day holiday-shortened week and the month with the Dow plunging more than 600 points on Tuesday, saw a gain of 38 points Wednesday, down 219 Thursday, and down another 410 points today for the Dow. The S&P 500 dropped today, and as I mentioned, notching its worst week actually since March of 2023. Investors taking in the fallout from the August jobs report and ditching the big tech names, including the magnificent one, NVIDIA, having a rough day today. The latest jobs report, by the way, showed that we saw hiring at 142,000. Analysts were expecting 161,000. The nation's unemployment rate did edge down to 4.2%. That was in line with what analysts were expecting. We did hear from the Chicago Fed president today, Austin Goolsbee. The longer-run trends in labor market and inflation data justify the Fed's easing interest rate policy soon and then steadily over the next year. That, according to Goolsbee, speaking to MarketWatch today. In his words, the long arc shows inflation coming down very significantly, and the unemployment rate is rising faster. Goolsbee said this compared with the Fed officials' expectations in June. Things are starting to change now. Investors widely expect now the Fed to cut rates by at least a quarter percentage point at the end of the policy-setting meeting we'll be getting later this month. But softening job market news have boosted bets that the Fed could go bigger. The S&P 500's tech sector had a very rough day today. That plunged on the day. The 4.7% drop for NVIDIA today in the spotlight. Shares were down about 14 to 15% on the week, and that would be the worst weekly drop since September of 2022, a weekly drop on the order of about 16% for NVIDIA. The price of oil has also come under pressure despite the tensions in the Middle East. Oil today losing about 8% for the week, with concerns now about global demand. Brent crude now is at its lowest settlement price since December of 2021. Oil had moved up shortly after the disappointing jobs report, lifting prospects for a Fed interest rate cut that's likely to stimulate economic growth and oil demand along with it. As far as the Middle East is concerned, the Biden administration and Israeli Prime Minister Netanyahu sharply at odds today over prospects of reaching a deal for a Gaza ceasefire and hostage release, with Netanyahu saying it was exactly inaccurate that a breakthrough was close, according to a report from the Associated Press. And National Security spokesman John Kirby disagrees with that assessment. Coming up later this hour, I'm scheduled to speak to Southern California Republican Congresswoman Michelle Steele. The acting U.S. Labor Secretary Julie Su wiped out her own $32.6 billion mistake when she was California Labor Secretary, when she oversaw the state's Employment Development Department, the EDD, which it turns out lost more than $40 billion during the pandemic due to fraud. Secretary Su recently forgave $32.6 billion of that debt because California owed it to her federal agency, where she still has not received a U.S. Senate confirmation mostly over this. We'll talk about it, and we're scheduled to talk about it with Congresswoman Michelle Steele. Also this hour, Angela Marsden will give us the reel on what's happening in the restaurant business in the wake of the jobs report that came out today. Last week at this time, we had Norm Langer, the owner of Langer's Deli near MacArthur Park in the downtown Los Angeles area. He is threatening to shut down after that place has been open for 76 years due to crime and homelessness. Angela Marsden has been outspoken on those issues as it relates to not only restaurants but all small businesses. And Angela Marsden will be joining me live later this hour as well. But first, on your money, the markets and the economy and the whole works now to wrap up a rough, volatile week and our first week of September, which has gotten off to a rough start. Joining us live now, stepping up to the plate, please welcome Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary: How to Profit with Any Asset in Any Market at Any Time. Jonathan, thank you very much for taking the call this afternoon.
My pleasure, Frank. It's great to be with you. And ironically, September is coming in just as expected. Many people think of October as being the worst month in the market, but historically, September has historically been the weakest month for stocks. And those job numbers we got today almost seem to confirm, finally, putting the nail in the coffin of what everyday Americans had been saying for quite some time. The economy is slowing, jobs are getting more scarce, and it's a complete change from basically what we have been hearing from the administration for years now. The Biden-Harris administration had been telling us the economy is strong, jobs are strong, and now, yes, the economy is slowing, jobs are more and more scarce, and that's what the data confirmed today.
On the air live with Jonathan Hoenig, and listeners of this program who heard you on weeks ago, Jonathan, you warned about the Mag 7, including NVIDIA, which, of course, is a Wall Street darling. Until this week, it's down to 102 and change, down more than $4 today to 102.83. You had indicated to this audience that you were taking money off the table and avoiding the Mag 7, including the magnificent one here, NVIDIA. Give us your latest assessment of what happened here in the tech sector in this week's washout.
Well, Frank, really, it's gone from being the sector to be in to being the sector to avoid. And just as tech seemed to lead the market on the way up, it's truly led it on the way down. And as you said, when you see a stock like NVIDIA drop 16% in just one week, these are really dramatic moves, hundreds of billions of dollars behind some of those moves. And I still think that those Magnificent Seven, wonderful companies, but even now with some of these losses, still overvalued stocks. And, Frank, one of the names at a 52-week low this week was Intel. Today, this is a stock down 60% just this year. So, we've seen so many of those former high flyers become extraordinarily weak stocks. And, I think if I had some money in any of those Magnificent Seven, I wouldn't be buying this dip. I don't think you necessarily sell everything Monday morning, but I think you have to be very cautious buying dips because, as we know, trends tend to persist. And believe me, in April, May, and June of 2000, people thought they were getting a great deal in Cisco and Microsoft. Those stocks took, in many cases, 10 or 12 years to eclipse the levels they had recently been at before.
All right, I do want to ask you this, and luckily you explained things in plain English, and I don't want to put the audience to sleep asking you about what happened in the bond market today, but for the first time, more than 2 years, we saw an uninverted yield curve. Maybe you can explain that for us. What does that mean, and does that signal a recession or out of the woods, or what does it mean?
Well, for years, exactly as you said, Frank, the yield curve has been inverted, meaning that the yield on the 2-year bond had been higher than the yield on the 10-year bond. And that's usually not the case. Generally, we're accustomed to longer higher interest rates for longer periods of time. So that yield curve has been inverted. That is historically signals a recession. But the irony is when the recession actually comes, is exactly now when that yield curve uninverts, if you will. If you look back throughout history, that's technically when the recession begins. And there's a number of ancillary indicators suggesting that as well. So, I think it's a good news longer term, Frank, that the yield curve has once again normalized. But many of us have been waiting for a recession, and that uninversion historically tends to be when it finally arrives.
That is something worth noting. We're on the air live with Jonathan Hoenig, and interestingly, about a month ago when we got the last jobs report, that one rattled the market too over recession concerns. And now this one, not a steep of a reaction on Wall Street today. The Dow was down more than 1,000. Last time the jobs report came out last month. Today we were down 410 points at the closing bell, and tech names especially getting hit. The NASDAQ was down even more than that.
And Frank, I'll just say this. I mean, what's really worrisome probably for those interested in the economy isn't so much the weakness in tech. I mean, those stocks were very overvalued to begin with, but almost all the oil stocks, Frank, you mentioned oil at its lowest close in a couple of years. Almost all those oil stocks, ExxonMobil, BP, these are major parts of most people's portfolios, the indices, and to see them all scraping new 52-week lows kind of adds fuel to the fire to that belief that the economy is slowing and slowing fast.
That is a very good point, and we'll take a closer look at that coming up here this hour as well. What about the volatility index, the VIX index, the so-called Wall Street Fear Index, spiking again, not as much again as we saw recently when we got that last jobs report, but we did see the Dow enduring its worst week since 2013 after that softer than expected jobs report. The VIX index, let me take a look here, ending higher today by about 12.5%. Would you be betting on volatility continuing in a market like this?
Well, Frank, the old saying from the trading floor used to be, when the VIX is high, buy. When it's low, look out below, meaning that when the VIX is low, when fear is low, that's when you want to be scared. And when the VIX is high, and it's pretty high now, that's when you want to get in there and buying. But I tell you, what I'm buying isn't those beaten down technology names or even the oil stocks. I'm looking at some pretty many people would say boring parts of the market, but preferred stocks, Frank. These are a stock bond hybrid that are doing very well considering interest rates are coming down quite quickly. So I'm looking at stocks like PSFR or SPE. These are both ETFs that track indices of preferred stocks. And I think for those who might be a little too worn out by the volatility in common stock, preferred stocks, many of which yield 6 or even 7%, might offer some shelter for the storm. You always want to do your own due diligence, but preferred stock as an asset class, I think you could absolutely look at, even given some of this news of a weakening economy overall.
All right, thanks for raising that. And it's fun when it goes up, but not so much fun when it goes down. I'm talking about cryptos here now. I know you don't have the laser eyes on, but we talked to the biggest fans of crypto here as well as the harshest critics. Bitcoin today back down to below 54,000. What are your thoughts about what you're seeing there in the crypto world?
I'm cautious on crypto, Frank. And you're right. I've never been a big believer, but I've never been an outright hater, at least. What I find worrisome about crypto is not only the price action of Bitcoin itself, but all those ancillary tokens. Frank, there was a note out this week that some 93% of all those so-called NFT, non-fungible tokens, are considered worthless. So it's a lot of money that had been betting on crypto that's been lost. And probably the best indicator are some of those crypto mining companies like Marathon Digital, stocks down about 40% year to date. Riot Blockchain is another one, also down. So, you always want to go where the action is and try to find what's working. So I'm much more interested in the company like AT&T. Now, that probably sounds really boring to your listeners, but AT&T is a good old-fashioned value-oriented dividend payer. It is breaking out to new highs, even as those high-tech companies and crypto melted down this week. AT&T, or even some of the tobacco names, Frank. I mean, British American Tobacco, BTI, Philip Morris, MO, totally out of step with what's been popular for many years on Wall Street, but it's what's working now, and I think investors would do best to investigate some of those opportunities.
All right, and one name that came up this week, and this is probably one of the first stock symbols you probably learned. Your dad probably put it in the Quotron machine, and that was X, U.S. Steel, making news this week, closing higher today. Looks like there's a lot of discussion here about preventing a Japanese steel company from taking the famous U.S. Steel Corporation over. What about that one?
Well, Frank, it's what's distressing is to see that intervention in the marketplace. I mean, U.S. Steel itself said that they need a merger, and if this merger with Nippon Steel doesn't go through, you could see tens of thousands of jobs lost. And I understand that probably the trade ambassadors and the trade administrators are concerned about a company like U.S. Steel being so-called owned by foreigners, but for one thing, this is Japan. This is an ally of ours, and the other thing, more importantly, is that companies get bought and sold all the time, and when government steps in, oftentimes terrible ramifications follow. You might remember Amazon was going to buy iRobot earlier this year, integrating it into some of its competitive technology, et cetera. Well, the Federal Trade Commission kiboshed that deal. iRobot stock has fallen dramatically, and the company's basically on its deathbed now. So let these companies merge, is my opinion, and U.S. Steel is going to be a political ping pong, at least through the election. It's one name I'd avoid.
All right, and let's take a look at the precious metals here. Gold coming off its recent record high, down about 16 today to 2,526 and change. Silver pulling back below 30 recently, down 83 cents today to 28.27. What about these precious metals here now?
Well, Frank, I have to say, I think they're buys. You always want to do your own due diligence, but if you've ever considered having gold as part of a portfolio, I do think now is a great time to consider. One of the reasons is exactly as you said, that all-time high. Most of us are, scared about buying an asset at its all-time high. We think, oh my gosh, if it's high, how could I buy it at the high? Well, more often than not, that high is not the high; it's just a high. Even more interestingly, in the last couple of weeks, you finally started to see the dollar drop actually quite dramatically, down to 6 months, 8-month lows against many of the currencies. So gold, GLD, I think, is a great part of portfolios now. And if you're interested in betting against the dollar in particular, UDN, that's Umbrella David Nancy. UDN is an interesting security. It goes up when the value of the dollar goes down. So that could be one trend, Frank, that is just now starting to unfold. After many years of a very strong dollar, you're seeing gold shooting up and the dollar dropping. And this is one I think investors should investigate as well.
On the air live with Jonathan Honig with Fox News, and also the author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time, portfolio manager at Capitalist Pig Hedge Fund. At this point, Jonathan Honig, after that excellent analysis, and you've shared already some thoughts on this, but where are you putting money now and or taking it off the table?
Well, Frank, one name you might consider is, again, in that vein of AT&T, is another telecom company. For years, foreign stocks, international stocks have underperformed pretty dramatically, but a weak dollar has pushed many of them back in the spotlight. So I like South Korea Telecom. SKM is the ticker symbol there. Definitely one to consider. And even more broadly, there's a bond ETF, which is BNDW. And this is just an easy way, Frank, to play a cheaper dollar, a weaker dollar, and earn some dividend income or interest income at the same time. So if we see the dollar go down and interest rates go down, BNDW will do quite well. And what I like more than anything is it's not correlated to the NASDAQ, Frank. We've gotten very accustomed to only owning those so-called Magnificent Seven stocks. There's a big wide world out there, and I think international is going to outperform for quite some time.
Terrific, Jonathan. Well, thank you very much for sharing your expertise with us. That is investment expert Jonathan Honig, Fox News contributor, portfolio manager, Capitalist Pig Hedge Fund, author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, always great to have you with us. We wish you a great weekend, and thanks again for coming to the line this afternoon.
My pleasure. Thank you, Frank.
Fantastic. Thank you very much. And right after the freeways we go now on 790 KABC. Oh, yeah. Get into that conga line. Feeling hot, hot, hot. Huge conga line on the freeways. We'll have an update on that for you shortly. Mottek On Money continues here in 790 KABC. Good afternoon. Not so hot for Wall Street this week, though. In fact, we've seen the worst week in quite some time. NVIDIA, the Magnificent One, which had been hot, 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 has cooled off big time this week, shedding about $406 billion in market value this week, down another $4.38 at $102.83 a share, drop of 4% on the day. The overall market was spooked by the latest jobs report. The major averages ended the day lower again today after the August jobs report rattled the markets. The Dow coming in for a closing loss of 410 points. The S&P 500 down 95, and the NASDAQ slid 437 points. The jobs report coming in weaker than expected. The nation's unemployment rate did dip to 4.2%. That was in line with expectations. The non-farm payrolls number grew by 142,000. That was weaker than the 161,000 expected by most economists. All this sparking new concerns about the health of the economy. Of course, a month ago, we had that washout after the last jobs report came out for the month of July, which fueled recession worries, and some other signals in the bond market also renewing recession worries. Investors widely expect the Fed to cut rates by at least a quarter percentage point, though, at the conclusion of the big meeting later this month, a big powwow with Fed Chairman Jerome Powell. Softening labor market trends have boosted bets that the Fed could go bigger. Will it be a quarter point or a half percentage point? Looks like the betting market split pretty evenly at this point. As I mentioned, NVIDIA leading the tech sector lower today with that big drop in the NASDAQ, which closed down 437 points. Bitcoin also down for the ride, right now rebounding a bit, up about 300 at 53,790, up back below 54,000. Ethereum up about 50 now at 2,219. That one's been hit hard this week. And Doge at the moment at 9 cents. Taking a look at analog gold as opposed to digital gold, the cryptos. Gold down 1630 today at 2,500, 2680. Silver down 83 cents at 28.27 an ounce. And now the latest news for you here on 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. A rough landing for the stock market this week on the latest jobs report. The Dow closing down 410, the S&P 500 down 95, and the NASDAQ down 437. The release of the August jobs report putting new attention on the U.S. Department of Labor, headed up by an acting Labor Secretary and a familiar name here in California. The acting U.S. Labor Secretary is Julie Su. She served as acting secretary since last March, when then Labor Secretary Marty Walsh stepped down to become the head of the National Hockey League's player union. Now, the acting secretary wiped out $32.6 billion in fraudulent unemployment claims here in California when she was California's labor secretary, when she oversaw the California Employment Development Department. That's the bill that it ended up being. And turns out she recently forgave the $32.6 billion of that debt because California owed it to her federal agency, where she still has not received U.S. Senate confirmation, mostly over this. Joining us live now, Southern California Republican Congresswoman Michelle Steele. Congresswoman, thank you very much for coming to the line this afternoon.
Thank you for inviting me today.
Wonderful to have you with us. And I remember you had that big hearing on this issue recently, along with the Ways and Means Committee chair, questioning Acting Secretary Su about all this. Where do things stand at this point?
You know what? It's really interesting because Biden administration hired the failed California Labor Secretary that under her watch, they lost $32.6 billion to fraudsters. And then, you know what? Hiring her and then try to make her to become labor secretary. And she couldn't even get 50 votes from a Democrat Senate. You know, that's how radical Julie Su is. And that's the way it moved on. So when we had the hearing in Ways and Means Committee and Education Committee for Workforce, and then, you know what? Actually, I asked her that, are you going to forgive fraudulent payments of California? She said, absolutely false, and I cannot do it, and I would not do it. And I told her that I hope you are not lying because you already did that for AB 5. You all remember that, law requires companies to reclassify independent contractors as employees. And she said she's not going to do it last year. She cannot do it. And she implemented that PRO Act in the nation. So she's been keep lying about what she did. This is under oath that she told Congress that she won't do it. And last month we found out she just did that. And you know what? She never refused, she never, notify us or answer any questions because we keep sending a letter that we want to see those letters. We want to keep sending the letter that what's going on with you and why you are doing that. And you know what? Never got any answers from her.
On the air live with Southern California Republican Congresswoman Michelle Steele. So isn't there a conflict of interest here where she's forgiving the money owed to the federal government from California, which and now ended up heading both of these agencies?
Yeah, it's a totally conflict of interest because on her watch this happened, and now she became acting Secretary of Labor in the nation, and then now she actually forgave her mistakes in California. That cannot happen because this is taxpayers' money, and this is not her money that she is forgiven. This is taxpayers' hard-earned money. You cannot waste money like that.
You serve on a very important Ways and Means Committee, which has been working to make taxpayers whole following all of these fraudulent payments. Any progress on that front? And thanks for speaking up for the American taxpayer, including all of us here.
Thank you very much. Ways and Means Committee is doing a lot of tax works, and then we are actually preparing that Trump Tax Cuts and Jobs Act in 2017 one when it actually does not renewed next year. It's going to be expiring next year. So if it's not, then you know what? Average Americans has to pay $1,100 more taxes.
That is very significant, and I'm sure you've taken a good look at what President Trump has put on the table as far as tax policy is concerned, and what we're hearing piece by piece from the other side, including the possibility of a tax on unrealized capital gains. What are your impressions of the contrast between this big choice?
Well, you have to really look at it because, like corporate tax, that it went down on 2017, that from 35% to 21%. Now, Biden administration and Kamala Harris wants to raise that to 28% because we have to help industries to bring more. When GDP goes 1 point, then you know what? Actually, government receives more than $600 billion. And, you know, you really help these corporate taxes that, you know, maintain low corporate tax rate to ensure American businesses are competitive. And then, you know what, in California, that we have a SALT issue state and local tax deductions, and they're capped at $10,000 in tax bill. And I hope that this is going to be actually expiring. So most of Californians that they don't, you know, when they are itemizing their taxes and they can actually deduct more. But, you know, there's a small business deduction that calls Section 199A that you can actually that provides pass-through entities of 20% deduction on qualified income. So this is very, very important for small businesses because small businesses are backbone of, you know, United States economy. And then how about estate and lifetime gift tax exemptions? It went up from $5 million to $11 million. Expires 2025, then it's going to go down. And then we have standard deductions. It went up. The single filer can file from $6,500 to actually they can deduct $12,000, and the joint filers, that $13,000 to $24,000, they can deduct more, almost double. But 2025, if it's expiring, then guess what? It's going to go down to $65,000 and $13,000. So most of people losing actually more money than $1,100. But you know what? That's $1,100. I was saying is average amount.
Thank you so much for explaining that so thoroughly and having a total command of all that important information. We appreciate that. Getting back to the acting U.S. Labor Secretary who wiped out, $32.6 billion of California Employment Development Department unemployment claims fraud here. She still has not been confirmed by the U.S. Senate. Do you think she'll ever be confirmed? And have we ever seen a situation like this before, where somebody in such an important position has not received a Senate confirmation?
Never. I never really saw that. And you know what? President Biden is keeping her an acting capacity instead of choosing a new nominee means that President Biden is actually disrespecting the confirmation process. So she's working as an acting, and then she is actually forgave $32 billion for, you know, what she caused actually on her watch that happened. So this is really interesting to see. I don't think she ever get it because she couldn't even get 50 votes, you know, from a Democrat Senate right now. In the Senate, we have more Democrats and majority of them, you know, it's Democratic Party right now, 51 seats. So in November, I think it's very, very important we take more congressional seats on the Republican side and then Senate seats so we can work together. Even they didn't nominate her because she's so radical. But you know what? President Biden still kept her as an acting capacity. So, you know, this has to be changed, and I've never seen it. And you know what? We really have to respect confirmation process.
Congresswoman, thank you very much for highlighting this enormous story, which has not gotten much attention at all. It's obviously an enormous story, and thank you so much for sharing it with us here, and we'll stay on it. That is Southern California Republican Congresswoman Michelle Steele live with us here on Mottek On Money on 790 KBC. Mottek On Money continues here, 790 KBC. Good afternoon. It was just a week ago at this time when I had the chance to speak to Norm Langer from the famed Langer's Deli in the MacArthur Park area there, just outside of downtown Los Angeles. He told us he was thinking about closing. He was visited by Nathan Hochman, the candidate for a DA here in Los Angeles. Also, Mayor Bass was there recently, and they're trying to improve the situation in the MacArthur Park area where crime and homelessness are big issues impacting the Langer's Deli business. Of course, this is nothing new to many restaurants in the area. We've heard about this from the fantastic Angela Marsden, the owner of the Pineapple Hills Saloon and Grill in Sherman Oaks, has been dealing with similar issues. And Angela Marsden is joining me live here right now. Angela, thank you very much for coming back to the line this afternoon.
Hey, Frank. How are you doing? Thanks for having me back. I appreciate it.
Wonderful to have you with us. And what's your reaction to the situation there, which, of course, I'm sure does not come as a surprise to you?
This is a battle that I've been battling, as you know, for at least 2.5 years, to the point where I, still am holding a call with LAPD and the City Council's office. Myself and other businesses, we've went to the news. We've talked with the mayor. We've met with the mayor. I mean, we met with the mayor when she first got elected. The problem is it's a mindset. Nithya Raman is in, my CD4, Nithya Raman, and who represents my area. And their answer is they don't want to criminalize homelessness. Yet we're getting hit with everything under the sun, but now we're supposed to have robberies, and who pays for that? Who pays for that when we shut down? How does the insurance work? It goes up if you make claims. I mean, it's all put on the small businesses. And I have been telling my city council office this. I've been telling representatives from the mayor's office this. Literally, you guys come up with this, philosophy that isn't keeping anybody safe. It isn't serving the community. But who foots the bill? The small business owner foots the bill. Of course he's thinking about leaving. It is already exceptionally hard to be a small entrepreneur and survive. It was before all this started, Frank, as you know. And now we're supposed to deal with naked homeless people in front of our property, customers being attacked, plates being thrown, people with junky needles in their arm, filthy, butts hanging out, peeing in front of your patio, and getting robbed, and nobody being arrested, and they're going after the smash and grab in the big malls. They're protecting the big corporations, aren't they? But what are they doing for the small mom and pop businesses that are getting robbed and pillaged, and they are dealing with insanity? And I can tell you firsthand, every other week I'm on a call. I am on a call with security guards from In-N-Out, with other business owners. I have 2 businesses in my area that just closed, and one of them was in the fight with me, and it was the Sherman. And he desperately tried and continued to say, we keep hearing this talk. We've met with the mayor. We've heard the talk. But what are you going to do? Are you going to start doing something about it? And they're not going to. They pass the buck. The city council says that they're doing the best they can, but they can't commit anybody because of the county. The county says they can't do anything because of the laws with the state. The mayor says her hands are tied because of the laws with the state. It goes round and round and round and round and round. And nobody cares what's happening to the children, what's happening to our middle class, to the homeowners' value of their properties and the safety. They're being robbed. Homeowners are being robbed. Businesses, it's open game. It's open game. Everybody, I don't understand how they expect people to stay and to stay in business. And the worst part is the more empty shops you see, the more homeless, the more dirty, the more grime. You need a vibrant, beautiful city filled with artisan boutiques. That's what I fell in love with LA for. A safe street for your kids to ride bikes on. And it's all gone. And they don't care. The philosophy that they have is they don't want to criminalize homelessness, and I'm all about helping the homelessness. But at what point do we stop doing the same thing over and over, hitting our head against the wall over and over and not holding anybody accountable? You know, I don't understand. I don't understand how Gascon can even be in the running. I don't know how he wasn't recalled. I don't know how we can put somebody in the office, mayor's office, who is not going to be aggressive and take a good stance on dealing with the homeless problem. And that means aggressive in building also beds for them, aggressive in committing them. We have new laws. We have a governor who, I don't know why he's doing it, but he's saying, you know, start utilizing the laws that I have in the book, even threatening the county to not fund them. And they're not listening. They're not listening. So I don't understand how any small business can actually thrive. And what I mean by thrive is I'm still open. I just am going over my budget this week going, do I have to cut hours? I've been holding my thing tight to try to keep my guys employed in my kitchen because they've been there for so long. And it is so expensive to live. To even cut one day from their schedule is devastating for them. But guess what? We've all been propped up by loans, and we all have back stuff due from COVID. And we've hit, you know, people are hitting the point now where there's no point in doing it because all you're doing is surviving instead of thriving. And it hurts the community more than anything, Frank. It hurts LA. It hurts the middle class. It hurts the artist that needs that job. You know, we employ a lot of the people going to college. We employ single mothers. We employ people chasing their dreams. I have the best staff in the world at Pineapple Hill, the best. And I am so proud of my staff. And they're all trying to accomplish their goals, and they all have to work 3 jobs.
They have a great leader,
you know?
Angela, and thanks for laying it on thick. As always, your concerns have not fallen on deaf ears here and throughout Southern California, and may have fallen on deaf ears at City Hall, but we're with you and want to support you, and thank you very much for telling it like it is here. As always, Angela Marsden, the owner of Pineapple Hill Saloon and Grill in Sherman Oaks. Thank you very much, Angela. We wish you a great weekend. Hope to see you up there sometime very, very soon. This is Mottek On Money on 790 KABC.
Welcome to Talkville, the ultimate Smallville rewatch podcast. Lois Lane's here. Erica Durant's. Hi, Erica. It had to be nerve-wracking. What was your first reaction?
When I first read it, of course, they included the part of the scene where Lois gets up there and she thinks she's doing really great, and then she bails on stage. It was supposed to be comedic, but then they just cut out the comedy, and then I just looked like a stripper, which isn't a bad thing, but it was what my aim was.
Binge seasons 1 through 4 of Talkville before season 5 begins, wherever you listen.